Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Friday, the 17th of July. Starting off with a stock which has never appeared on the Bulletin Board Heroes before, ASOS, and the reason that it's included today to sort of break the mold is that shares have come off of an extremely oversold level, around 15 out of 100 on the RSI scale. And the point of interest here is that the last two times the shares were sub 20 on the RSI scale, they had massive rallies, one in March last year and then one also at the end of 2018. So let's see if history repeats itself. We've had recent good examples of this historic RSI rebound from Eurasia powerhouse, and perhaps even we'll get that from a similar at the moment. There's three stocks that are currently doing that, but it looks as though ASOS could be a prospective rebound candidate. Speaking of Eurasia, just revisiting that now, because every time the shares go down, the bears start getting excited that it could be the end of the line for the rally. But on this occasion, probably not actually. So far, we've got the 200-day moving average there around 26 and a quarter pence, and at least while we're above that, we've got the chance of rebounding back to the best levels of the month, towards 40 pence. I suppose the negative scenario would be that we had to dive down towards the low 20s, i.e. break the 200-day line and then bounce off the 50-day line and that broken resistance line there from December. But at the moment, it looks as though there's enough here to settle the stock down around the 26 pence area. On to Hurricane, which has updated the market today. Here you can see that we've got this rather laboured basing in progress. It's good that the shares have gapped up today, which shows that there's a bit of decent buying momentum here. Top of the channel there, and the target up towards that February resistance line at 4.8 pence. And that's valid while we hold above the low of yesterday at 3 pence. So end of day close back below that would delay the upside scenario, but at least it represents a decent stop loss point. On to Horizonte, where we can see that it's a bit of a sort of lap of honour for the bulls at the moment. The shares are pushing higher and sort of accelerating to the upside. We had a target there towards 11 pence, 11.5 pence, and then maybe that can be hit by the end of that next month. That's a line of resistance from back in March this year. At this stage, we're hoping really that support will continue to come in around 8.5 pence, which was the old April peak. Moving along to Love Hemp, which has been able to show off its relationship with Amazon, which I suppose should be a massive, big deal. Distribution and sales are everything, I suppose, for companies like this. Here the shares have gapped up after bouncing off or just below the 50-day moving average, around 2.7 pence, but the gap higher today quite significant, I think, and that could be enough to get the shares back up towards the old peak from May, around 4 pence, perhaps as soon as the end of the next month. So while we're above the 50-day line, 2.7, looking for 4 pence on Love Hemp at the moment. Stock that I tweeted out about earlier today, in fact, was Midatech. And characteristic of Midatech is we've had sort of 2-day wonder rallies in the recent past, and it looks as though after a gap of 3 months, we may be overdue another one. The idea here is that as long as we remain above the 50-day moving average of 26.5 pence, we could hit that line of resistance there from June as high as 33 or 34 pence. And obviously we've seen in the recent past shares have actually spiked towards 50. It's a very weird type of chart that this stock has, something of a sort of heart trace monitor vibe about it. But above 26.5, looking for 34 over the next couple of weeks at Midatech. Another stock which is been rather difficult of late, sort of playing the waiting game here on OilX. But we've got another of its periodic spikes. And the view here is that what we'd like to see is an end-of-day close through the 0.25 level or above that. If we could do that, then it's obviously up to 0.3, which is the main resistance here. But a weekly close or an end-of-day close above 0.3 could be enough to get the shares up towards 0.48 by the end of next month. But ideally, we hold above 0.25 and only really back below 0.22, really delaying the upside scenario there at OilX. Moving along to Orphan, which, although the shares haven't moved that much, The reason for inclusion today is just really that to underline that the fact that the stock is bouncing off the 50-day moving average at 24 pence. The longer we remain above that, the greater the chance of a move back up to the 30 pence area, which is the 200-day moving average. The other attraction of the chart is the bear trap gap reversal that we had last month through the 20 pence level, and that should mark a lasting low for the shares. A difficult candidate here is Rambler Metals and Mining. Here we've had a slow recovery here. We're expecting it after we broke the line of the resistance there from May. We also gapped up, which I didn't actually notice before, gapped up off the support, and that tends to be a strong signal. So far, we're above the 50-day moving average and a weekly close above the 50-day line, as we should expect to get today. Should be enough to take the shares up to 32 or 33 pence over the next 2 to 3 weeks at the current rate of progress. Thor Mining has been revamped partly as a uranium play. Here we've got a situation where stock gapped up quite wildly earlier. Well, actually, it gapped up at the end of last month and then again this month. So above the 200-day moving average at 0.85, we're looking for 1.3 pence at the top of that broadening triangle from the end of November. Just a couple of stocks to go now. One is Valyrian, where some people have been throwing stones at the stock, but you can throw all the stones you like, given the way that the shares have risen from around a penny in February up to, well, they hit 80 pence, and even a penny to 30 pence is not a bad return compared to many stocks. Current situation is that we've had a double bounce off that support line, relatively obscure support line there from February, around 26 pence, and all we're looking for now is a break of that resistance line there from June. If we can get through that, then probably we're looking for the mid-40s again by the end of next month. Finishing off with another stock I tweeted about earlier this morning, and the reason for that was that very often in charting and very often with stocks, small cap stocks, once the stock breaks 25, the next level up for some reason is up to 35 to 40 pence, and there's not much in between 25 and 35. We had that kind of rally back in January for the shares. Obviously, we cleared that area in September as well. But the current situation is that an end-of-day close above the resistance line there from January at 25 pence should take Valerix up towards 40 pence and that February resistance line projection. And that can be hit by the end of next month. That's it for me today. More updates over the weekend.